Hello and welcome to Cardio Live. I'm James Bagger. I'm the founder of Cardio Magazine. And joining me today is Cap HPI's Director of Valuations. It's Derren Martin. Derren, hello. Thank you for joining us. How are you?
Hi, James. Yeah, I'm well, thank you. How are you?
Yeah, good. Thank you. Yeah, good to see you. Now, it's been an interesting month from the dealers that I've been talking to. Some say it's a real mixed bag out there. One of the dealers we were chatting to last week on the podcast said they've been cutting prices drastically. What are you seeing out there?
It's interesting you say that because I think it is a mixed bag. Retail world is tough. It's tough. It's definitely toughened up. We sort of saw it toughening up from probably around the 11th, 12th of the month in October. So yeah, speak to dealers. They are still selling, but I think it's more that sort of necessity purchase that is selling. I think the aspirational side of it is very tough. I think they're having to be very competitive if they want to attract buyers. You've got seasonality, time of year. You've got sort of winter around the corner. People with a sort of one eye on winter fuel bills as well as Christmas. So you get a seasonal turn down, but then also you've got cost of living concerns with people's mortgages coming to an end and having to pay hundreds of pounds more a month. High interest rates, all of those sorts of things playing in. So it's a tricky month for dealers, I think.
Yeah, I'm definitely hearing the same things. So what's that resulted in terms of pricing? How are we looking this month?
So 4.2% drop, which is about £850. That's at 3 years. So there's a lot of headlines around this. It's the biggest drop we've ever done in October. It's the biggest drop we've done in a single month since May 2011. And since we introduced live in 2012, we've only dropped values by more than 3% on 3 occasions over all of those years, and obviously we've dropped them by 4.2% this time around. So I'm describing it as a significant realignment. It's not a crash, but there's more cars out there and there's less demand. Dealers that we're speaking to they're picking off cars, they're replacing cars that they sell. They're not stocking up. Not spoken to a single dealer that's stocking up. So when you get more supply and only sort of selective buying, that obviously affects prices.
That is quite a significant drop there, Derren. I mean, we've been chatting on these video calls now for a couple of years, and I mean that is the largest one, as you say, that we've ever heard of. What do you think is the single biggest cause of this? Is it this credit crunch, this time of people's wallets really being hit? Is that really starting to coming home to roost?
I think that's one of the factors. You can't say there's one factor. I mean, cars are generally still 20% more expensive. Used cars 20% more expensive than they were at the start of 2021. So that's a factor as well. There's room for cars to come down in price. I think the main thing is supply. There's a lot of cars out there. And yeah, those demand factors of seasonal. So feedback from the dealers, yeah, we're getting back to more normal seasonality. This tends to happen at this time of year, but you have got the cost of living squeeze hitting as well, and people worried about the winter and about their paying their mortgage is more important. If you've got hundreds of pounds more on a mortgage, are you going to go and make a big ticket purchase? We've seen convertibles, coupe cabriolets, they've been the heaviest affected. Obviously, that's seasonal, but also they're aspirational vehicles, and they've been coming down. Coupe cabriolets by over 7% this month, convertibles by over 5%. So that aspirational end is definitely hit.
What do you think is the biggest thing to be worried about here, Derren? Because I mean, there'll be a lot of people watching this who will see this as quite concerning.
Yeah, well, as I say, seasonality. So I think we're in for this for the rest of the year. I can't see what will make demand increase, and supply is continuing. The manufacturers are getting back to more normal times with supply. They're sending them to the fleet companies, so you're obviously getting fleet returns and part exchanges. But for dealers, I wouldn't be overly concerned, because I do think that January will improve. But you might have to batten down the hatches a little bit until then. I think that January demand will increase. It tends to happen most years, apart from obviously the odd COVID affected sort of January. But demand will increase. Consumers will be back out buying, we believe. But I do also think that there will be plenty of supply out there. So it might not lead to an uptick in values. It might just lead to smaller drops or a bit of stability, certainly for the first sort of couple of months of next year. So I wouldn't be overly concerned, but also I wouldn't be buying in bulk. I think with book drops happening, a lot of dealers are, as I say, they're just picking off, and they are having sort of 30-day policy on stock, not 90 days, and they're reviewing prices pretty regularly as well to make sure that they're even under consideration for those consumers that are buying.
Has this come as a bit of a surprise, Derren?
The magnitude of the drop has been a surprise. Yeah, we thought it would drop. It's dropped. Values have been dropping every month since April, and that has been at sort of 2% for July, August, September each month. We thought it might be more than September, but we thought maybe 3%. And even halfway through the month, we were saying, yeah, probably 3%. So it's definitely there's definitely been a sort of a rapid acceleration over the last 2 to 3 weeks, really, where prices have dropped more than we thought.
So what do you think that's going to mean for the next couple of months? You already mentioned the seasonality of this. November and December, traditionally quiet, colder months when people aren't out and about shopping for cars. Is this going to have a bigger impact?
Yeah, I think we might be in for we'll be in for drops down during November and December. I would have thought there's plenty of cars out there, and what we are seeing, which when demand has dropped away in the past, some vendors have been reluctant to drop their prices. But I think at the moment they're realistic, and they know that they may have to drop their prices to sell. There is another side of it that even if they drop their prices, I don't think that's going to stimulate demand particularly. They could drop prices dramatically, and dealers are still not going to stock up. They're still going to be wary. So I would sort of say, yeah, the next couple of months are going to be tricky. Their prices are probably going to come down. But I would sort of say to vendors, don't drop your prices dramatically. Let's try and sort of hold that market as strong as possible, because it might not stimulate demand. Batten down the hatches for the next sort of 2 months, and then go again in January.
And in terms of fuel types, can you give me the drops or rises in petrol, diesel, hybrid, electric?
Yeah, so all of the fuel types, excluding electric vehicles, have all been about 4% drop. EVs have actually been the strongest, 2.4% drop, and we've even put things like the Zoe and the Leaf up a couple of percent. So obviously we're looking at everything. There's plenty of data out there. Volumes are still strong, but they're selling for cheaper. But the Zoe and the Leaf, yeah, they've done well. They're opportunities for dealers, I think, at that cheaper end EV. Some of the more expensive stuff though has been coming down quite rapidly, and they're cars that maybe haven't come down so much over the last few months. They're now appearing in greater volumes in the market. So some of the Mercedes product has come down to 8-9%, EQC, EQS, Aria has come down, EV6 have come down, and these are sort of the newer models, as I say, that haven't been out there in great volume, that are now coming down. So it's really difficult, as we've said for a couple of months now, to talk about EVs in general terms. They're kind of all over the place, those prices. But yeah, so everything has sort of behaved similarly to each other in the petrol and diesel averages, but EVs have stood out as being stronger. But yeah, caveats within that there are some weaker cars in there.
Yeah, I can see. I'm just looking at your detail here that you've sent across prior to this conversation, and those biggest risers list. That top 10, you've got a number of electric cars, and you see Me, Mazda MX-30, Nissan Leaf, Renault Zoe, all with their prices going up this month. But on the other side, those big fallers, there's some considerable drops there, isn't there? Mitsubishi ASX dropping 13.5% thereabouts. BMW 2 Series down 12%. Skoda Karoq down 11.5%. What is it that's hitting these vehicles in particular? These ones that are falling?
They're being sold by a number of vendors for lower prices. It's as simple as that, and that's what we're reflecting. So there's plenty of them around, and there's not a lot of demand for them, and that's what happens. The vendors are taking a pill on them, and they're trying to sell them, and obviously they are selling them because we're dealing in sold data. If you think about the vendors that maybe put them on their fleet 3 years ago, they can sell them and reduce the prices and still make a profit, because their values have gone up by so much over that three-year time period. 2021 they went up, 2022 was pretty stable, so they can afford to drop them in price now, and that's what's happening. And they're just trying to get them moving by selling them for so much. But yeah, that EV world is really interesting, and those cars that you've mentioned there that we've put up, they're kind of price point EVs, aren't they? And that's where there are some opportunities there. So, and a lot of those have come down by a long way, and they now look good value.
And we've seen again this month, haven't we, that Tesla has cut the price of its new cars yet again. Last time it's done that, back in January, the major time, it had a big impact on their used prices, big impact on used electric prices in general. What do you think is going to happen now to the electric car market following Tesla's move?
Tesla's always an interesting one, and the Model 3 now looks really good value as a used car, but it's still come down in value this month because there's plenty of them around. So we've dropped the values of those by, I think it's about around 3%. The Model Y has come down as well, and volumes of those are going to increase. I'm not sure that their pricing move is going to make too much of a difference because the used prices now are so far away from the new prices. So, and although they did do that in January, prices were already coming down, and you could blame Tesla maybe because they had a lot of volume coming back. I'm not sure that their pricing realignment had a great deal to do or a great deal of influence for used car EV values. It was purely down to they were very expensive, and demand dropped away, press around the time, and range anxiety, and not being able to worry about being able to fill up and all of those sorts of things. So yeah, Tesla, especially the Model 3, it is so interesting to look at, because on the face of it, you think that shouldn't come down in value really, because they are real opportunities for dealers with those to buy aspirational vehicles, but it's a supply and demand situation.
Yeah, interesting to see what will happen with those next. Do you still feel confident about next year? I know we've spoken on these chats the last couple of times that you think pricing in 2024 is going to hold pretty firm, especially considering that we've got less in the used car park than we would traditionally see. Is that still going to be the case, or now, seeing what you've seen this month and what you're predicting for the rest of the year, is that going to have more of an impact?
We still think it'll be relatively strong next year, but as our head of forecast says, it could be a game of two halves next year. So it could be a bit of a tricky start with a lot of volume around, but then once you head further into the year, you've got those shortfalls of those of 3-year-old cars, nearly 2.5 million less cars in the market than there would have been previously if there hadn't been for obviously COVID and semiconductors. So I think it will pick up as we head through next year. And be a lot more stable, and maybe even have some small increases in value, because cars will start to look good value again. But it could be a tricky start, I think, because there'll be manufacturer activity at the end of the year. As I say, they're getting their supplies back to normal. There could be some pre-reg at the end of the year. They'll be pushing cars into fleets, and also conversion rates at the moment. If they're only at, well, they're not necessarily higher than 50% at the moment. That means 50% of cars still swilling around to come back into the market when things improve. So I think it might take a little while for any increases in demand to wash through into the values. So tricky start to next year, but we think it will pick up.
Derren, we'll certainly be following that very closely for the rest of this year and into next year. Thank you ever so much for giving up your time. It's really good to hear from you once again. Thank you.
Yeah, no problem. Thanks, James.
That's Derren Martin there, Director of Valuations for Trade Price Experts, Cap HPI. Now, for more videos like this one, you can subscribe to our YouTube channel. It's Car Dealer Magazine. Or for the latest on used car pricing, visit our website. It's cardealermagazine.co.uk and click on the used car tab at the top of the page. I'll see you next time. Thanks for joining me. Goodbye.